Hey guys, this is a market update. Just look at what this price action is telling us. It's telling us that the market wants to go higher, right? We have traded 8 to 9 months, 60, 65K. This is a new all-time high. Not this price here. Like, I get that the price printed there, but there was no volume. It got rejected. Same here. Price printed at these levels, but it got rejected immediately and, obviously came lower. 8 to 9 months around this level just shows you that the market's happy to trade here. This is the new price for BTC, 60, 65K. Now, we have an election coming up. Let's get through that volatility, come out the other side. Doesn't matter who wins, honestly. The market will go up no matter what if you're an investor. I'll show you some data on this throughout this video. But you can see here that Bitcoin at 65K, literally just ranging underneath this breakout zone, right? Can't do it yet. Maybe we have to wait for the election. As a long-term investor, what we really need to figure out is, the trend rate of growth. So this blue line is the 200-week moving average. We've just topped 40K for the first time. That's your Bitcoin, right? If you're a long-term investor, right? That's your cost basis. You're seeing your portfolio just range up higher. That's really the price of BTC. Now in a bull market, which I think we're in, and I think will continue, we would expect the price to obviously move higher than the moving average and bring this moving average up. But at 60, 65, we're not mature in the bull market. You can see what is left. Up to this top end, that is really a very mature bull market where the price is very, very overdone in relation to its trend rate of growth. We are not overdone. Right? We are just ranging and waiting for that next leg. When that comes, just be patient, I think. Right? Keep buying, actually, because I think this is still a massive buy zone. We're basically not even that far above the trend rate of growth here. So I don't think Bitcoin is massively expensive. The market is very happy to trade it here. It's clearly going higher over time, and I'll show you that as well. But what I've done here, these green dots, are essentially my map of how the moving average will grow. Not the price, but the moving average. That's the real price if you're an investor. And so I think it's going to annualize at 40, 38, 35, etc., and come down to 25, in time. But over a 10-year time horizon, I think the moving average moves somewhere in this region up to maybe 400K in 8-9 years time. But the price could be wildly different from that, right? The price could be up here in a bull market, could be down here in a bear market. Doesn't matter too much. I'll explain why I think that's going to continue to happen. Basically because Bitcoin is still being adopted and of course currency debasement. But you can just, it feels so bullish. It feels like the market wants to trade here, and bull markets take their time but push asset prices higher. Now, I'm going to be updating the Crypto Investor course in a couple of weeks after the election with a bunch of new videos. Check it out below. It's free, the update for existing users. So if you want to get in, the price does go up over time. But if you want to get in now before that, link below. And Bybit deposit bonus. If you do trade crypto, $30,000 deposit bonus. Just click the link in the description, make a deposit, get that bonus. Bitcoin's going to keep going up, isn't it? Right? Because all the data is here at this point. The ETFs are the #1 ETFs ever created in terms of inflows. So from top to bottom, from individuals up to corporations and funds and banks, they all want this thing. Why? Because it is the most logical investment, right? And it's annualizing at 40%, which it won't do forever. So money's flowing into this thing. Everyone wants it. The price is going to appreciate over time. Why? People want Bitcoin. It's logically a better investment to store your money. And number two, the currency will always be debased. And so those two things have what I call the trade of our generation and the sweet spot trade in Bitcoin. You can see all of this. Stocks, I've got no problem with stocks, about 8 to 15% if you're looking at the S&P or the NASDAQ. Problem is you need a brokerage account. Not everyone can buy US listed stocks, right? You need a brokerage account, you need a certain amount of money. Not everyone can buy it. Real estate, massively illiquid, huge ticket item, right? Very difficult to get into for a lot of people. Private equity and venture, the same. Huge ticket investments, right? 100,000 minimum, lock up for 10 years. What an awful thing just to get a little bit of outperformance. Like Lawrence says here as well, in fact, these VC and PE returns are actually very rare. I was there, I know most pensions would do better to buy an S&P ETF, right? Lots of the funds with single digit returns. So huge ticket investments, right? Uncertainty about the returns. Why invest in any of this stuff when you have Bitcoin, which is a list of things better? Invest $10, invest $1 billion, 24/7. It's fungible around the world. It is the logical thing to invest in, and it has higher percentage returns than any of these. That's insane. And so that's why money's flowing in. The second thing, currency will always be debased. Always, always, always. Vast majority of investment returns are not actually investment returns, they're currency debasement. And so just play the currency debasement. That's the trade that we're in. 40% a year for Bitcoin that's annualizing right now. Doesn't matter who wins in a couple of weeks' time. Doesn't matter who wins. Market always move higher eventually because their currency has to be debased eventually. You can see this as well. The fiscal deficit is insane. It's absolutely massive, right? GDP is positive right now. Governments need GDP to be higher. They always must have GDP higher, but the free market does not want to create GDP at a higher level. The free market actually should reduce prices, create wealth by creating abundance. When there is abundance, the price of those things, the cost of those things should come down, which means that GDP would actually trend down. But of course, we can't have that with the fiat currency system that needs leverage on these assets, and it must have the price level moving up. So the government and the central bank are in the middle to ensure that no matter what, the price level will move up. So if economic activity declines or GDP declines because of a creation of wealth, the reduction of costs, the government will have to step in, debase currency, either through the government side, through debt creation, putting that into the economy, or the central bank side by literally printing money. GDP must remain positive, and so the more the free market disinflates prices and creates wealth and creates abundance, they must step in with the fiat currency system, debase the currency. The fiscal deficit right here is showing us that, because what happened was a lockdown, and so economic activity must reduce. But you saw GDP go much higher. So the thing in the middle is currency debasement, and they will always do it. This is the national debt. Since the debt ceiling was suspended, it keeps going higher. It must go higher. Think about what GDP would be if they hadn't have done this. US debt record high, 35 trillion. Think about what US GDP would be if they weren't printing this debt. It would be negative. And of course, negative GDP means that all of the debt and leverage taken out gets more and more expensive over time, and the system is bankrupt and collapses in on itself. This will not be allowed to happen. So we know currency will be debased, stimulus will be put into the economy to make sure that GDP is 2%, and the free market wants to disinflate. So we know the currency will be debased. The way to play that is Bitcoin, and that's it. It's the best trade for this, and it's the biggest trade there is. There is an insane flywheel between the economy, the free market, and the financial system that just goes round and round and pushes asset prices higher. It's all about this flywheel. I want to try and explain that. So you have the free market, which should disinflate prices over time. That is real wealth creation, where the cost of things goes down. So you create productivity and you create abundance in goods and services, which brings the cost of those things down. Now, the problem here is that that creates disinflation. When you have the financial system, which is the other cog here, the financial system, which is built on leverage. Leverage is taken out upon assets at a certain price, and that leverage has to be paid off, right? And so if the free market is disinflating prices, it means that house prices and wages, goods and services can actually come down in the cost and the price of those things, because you're creating abundance, creating wealth and abundance, bringing the cost down. That doesn't play with leverage that was taken out when those assets were actually higher, or the price level and wages was actually higher. There is a fundamental dichotomy here that cannot come together. It's like oil and water, right? You have the free market dropping prices and the financial system requiring that that debt is at least payable or becomes cheaper over time. Financial system cannot mix with the free market. And so the third cog here is essentially the government and the central bank in the middle, which have to step in and they have to control the market to make sure that prices rise. And they do that through stimulus, fiscal stimulus, creating debt and spending it within the economy to force money into the economy and push prices higher, distort the economy, or you just print money from the central bank. And again, that creates this inflation through asset prices, price level rises, wages rise, this push upwards, tax revenues rise, etc. That has to happen. So the thing in the middle here that prices that in is assets. And the best way to price it I have ever found is Bitcoin. It's just a pure play on this system, which has to operate like this. This is proof. Everything the government gets its nose involved in, right, goes up in price. Hospital services, college tuition fees, medical care, housing, right? Housing, through regulation and literally buying of mortgage-backed securities, completely distorts the free market from dropping the price of those things lower, which it should. There should be abundant housing. We can build it, can build the units, but we can't have the price collapsing. So this flywheel essentially has Bitcoin, in my opinion, in the middle, just benefiting from this, right? The free market dropping prices. Like if the free market is allowed to do its thing, like in TVs and in computing and software, etc., the price of those things can fall. But the government has to step in these big sectors of the economy, pushing these prices up, right? Because it has to have this price inflation. And of course, housing and hospital care and education, they're the big ones, right? And so they can push prices up. They get their nose involved, push prices up. They don't let the free market do its thing because they can't. It is impossible. And so the thing in the middle to actually for yourself to try and actually get out of this, because that currency will always be debased by the government, always be debased by spending. It's been happening since the dawn of time. So the way to get out is to invest in assets. I just think Bitcoin is the play to actually get out of all of this. Inflation is absolutely required as part of our financial system. And the reason it's 2% is because if it was 25%, people would start to get angry. That's a very noticeable amount. At 2%, it's actually not 2%, it's more like 10%, right? Because under the hood, it is actually about 10%, not 2%. 2% is a fake figure in any case. 10% seems like people would kind of get on with their lives and they have a little bit of time to work things out. When it gets to the 20% level, 30% level, people start looking around and they start noticing and like, something is wrong here. I don't like what's happening. You can't have that. So you have to bring it down and make sure it's like 5, 10% so people don't notice. The problem is the Bitcoin trade for me, the next decade, very long trade, right? I don't want to trade in and out over weeks. The next decade trade for me is that what we've seen here is after the pandemic, all these governments had to spend on the fiscal side. They have to take out huge amounts of debt, pump it into the economy to create inflation because the world was locked down, which is disinflationary. They had to create that inflation through the fiscal side. But the fiscal side is starting to become an issue where the debt is so big that actually you have to take new debt to pay off the old debt, which creates this fiscal spiral. They really don't want that happening. So what they have to do is they have to create more inflation to make the debt they've taken out over these previous few years, which is insane. Let's try and find this. The amount of debt taken out over the last few years is absolutely insane, right? This is a fiscal deficit in the US. This amount of debt, they have to try and bring this back a little bit, right? So how do you do that? You can't pay it off. It's impossible. So what you have to do is try and debase that away by creating price inflation. So making that debt appear cheaper in tomorrow's terms by creating price inflation. So what does price inflation actually give us? Higher asset prices, higher prices of everything. Money can't price that in. It's money's supposed to be debased. Assets will price that in if you have them. Yellen sees her favorite debt metric staying out of danger zone. Just look what this is, right? White House projects 1.4% for the early 2030s. That's real net interest as a percentage of GDP. According to her, inflation adjusted interest payments as a percentage of GDP are the best way to gauge whether we have a debt problem. That means that if inflation rises, the problem gets better, not worse, right? There's no other way to try and reduce these fiscal deficits, and that is through price inflation. And that means central banks need to create this price inflation. That's what they are designed to do. And so price inflation comes out in asset prices going way higher. Bitcoin, again, is the pure trade for this. To put it a positive way, we have a couple of solutions that can prevent us being tied up with all of our money and our labor and our savings being debased and paying for this. So this is the current expenditures in the States, the US debt situation. It's pretty wild and it has to be paid for. And it's going to be paid for by dollar holders, essentially, and other fiat currency holders. Now, I think crypto is expanding the dollar into essentially the whole world through stablecoins. And that's something that the US can definitely use to sort itself out, issue more debt because there's more demand for the dollars. Maybe they can sort themselves out. But you don't want to be in the dollar. Now, the dollar's debasing at, let's say, 10% a year. That's really good if you're in a country where your currency is debasing at 50% a year. So that's better for you. But if you are not wanting your dollars to be debased 10% a year, then Bitcoin is actually accruing value at 40% a year. So you're 50% better off each year just by going into Bitcoin versus being in dollars. The problem with fiat currency, whether it's dollars or you're really getting wrecked, if you're in debt, well, at least you're getting paid some interest back, but you're still getting wrecked because the rate of debasement and inflation is way higher than the interest that they pay you. It has to be that way because they have to debase the currency. They can't pay you interest over and above what they're trying to do, which is debase the purchasing power of the currency. So you have to pay an interest, but that's going to be lower than the actual rate of inflation of desirable assets and goods and services. And so if you put your money in a savings account, what you think you're making is a positive return. You're actually not, because you have to take away inflation and debasement. And so what you're actually getting is wrecked. If you have a high yield savings account, you're getting wrecked and you're paying for this debt. Now, if you have a liability in the future that you know is coming in 3 or 4 years time, and you have the cash now and you want to pay for it in 3 or 4 years time, that makes sense, right? You know, it's only 3 or 4 years. I know that I've got the money to pay for that liability. I know what it's going to be worth. And so you don't want the volatility of Bitcoin. So I get it. There are use cases for everything. So that's that. But if you're a long-term investor, a long-term saver, retirement account, etc., you have to be in something more volatile than the rate of currency debasement and inflation. And there's really only 3 investable assets, maybe 4. 1, property, but not for everyone. S&P, NASDAQ, and Bitcoin. Make your choice out of those. A big update is coming to the Crypto Investor course. Check the link below if you haven't got it yet. It's free for existing users. All updates forever are free. And the Bybit deposit bonus down in the description up to $30,000 as well. I'm James, it's Money to G. Cheers for watching, and I'll see you in the next one.